And welcome once again to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. My name is Randy Cook, and each week we sit down here and talk through the issues of retirement. And if you don't have a financial advisor in your life right now, give Sharice a call. Let's sit down and talk through some of the things that you're concerned about and see if we can help. One of the things that we talk about here on the show is, boy, when times are like this, what do we do with our money? How do we position it? And we hear this all the time. Hey, if it's a 60-40 portfolio, 60% stocks, 40% bonds, in times like this, it'll be fine. The 40% will take over even as the 60 is going down. Well, that's not always the case.
No.
And when we talk about this whole 60-40 thing and all this allocation, Sharice brings up her model, which she talks about a 40-30-20-10 portfolio. And now, I've never heard of that anywhere but you, Sharice, and I'm out there looking around. And I found an article about a company that's doing a portfolio that is 40, 23, 20, 17. And I thought, that sounds like what Sharice does.
You know, them and Tony Robbins, they just keep listening to my show. Hey, I'm here to help other people.
I love it. So I guess without going into all the detail, and I think that's for the conference room, but the fact of the matter is, Sharice, you don't have to accept the cookie cutter norm, broad brush stroke, just not customized kind of a portfolio, do you?
Right. And the 60-40 is old school. If you want old school and do things back from the 70s and 80s, that's fine. Your returns, in my opinion, won't be optimized the way that they should be, and you might make much less or a smaller return. That's why we sprinkle in alternatives. Maybe it's a private equity firm. Maybe it's a dual directional note. Maybe it's, a couple bucks in annuity. Maybe it's the indexing strategies. There's a lot of things we sprinkle into a portfolio, and our 40-30-20-10 strategy blows away our old school 60-40 strategy. And this is why we do this. And actually, we've even broken that up a little bit more, Randy, but I don't want to make it confusing for this conversation. We like having things in our clients' portfolios. When the market goes down, we make money. When the market goes up, we make money. We always make more money when everything in the portfolio goes up and makes money. But when the market goes down, do you have anything that actually makes money on a down market? And we do. And so this is just part of our strategy. You don't have to have all your money in dividends or all your money in equities or all your money in bonds or all your money in annuities. You need a well-balanced asset allocation that has that 40-30-20-10. When you have a all-weather portfolio, you're going to have a better understanding of what's going on in times like this. You're going to likely have less worry because you're seeing things not going down, but maybe some things are, but not all things. Okay, something is happening. Oh, this month, this traded out of the portfolio and something went in. Oh, the active management in this portfolio is actually tuned in and it's actually working, right? And so people want to see something done. They don't want us to get paid as financial advisors and sit on our hands and do nothing. So making sure you understand and you trust, and therefore you'll have confidence when times like this do arise.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and/or categories usually do not deduct transaction and/or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.